Let us begin. My name is Darren Joseph, HJ Tax. We're a team of cross-border tax advisors that seek to demystify the sometimes confusing world of international tax for those of us who are trying to live that international lifestyle. Today, we have the honor and the privilege of speaking to the one, the only, Mr. William Fung. Bill, would you like to introduce yourself?
Thank you. Again, my name is William Funk. I'm a tax attorney, member of the firm Norris McLaughlin, and I do. I have a fairly broad tax practice, which covers such things as cross-border, tax planning for corporate transactions, as well as partnerships, personal matters, state and local, and I also deal with civil tax controversy. So it's a fairly broad tax practice.
Now, typically, at least, I mean, you can share your perspective, but what I've found is that, okay, someone is planning to make the move and they perhaps come from a jurisdiction that is not as complex from a tax point of view, which is kind of like most other jurisdictions. And then they recognize, hey, I need help. How do I find someone to help me? They reach out to, if it's an intercompany transfer, they speak to the CPA firm or the tax team that the company is using, or friends and relatives. Invariably, it's someone who is more proficient with domestic tax matters as opposed to international tax. And sometimes it gets confusing, right? So therefore the process may not be as thorough as it otherwise can be. So how would you recommend that someone who's planning that move, in the process of making that move, how do they find the right tax team to work with? How would you advise them? How would you point them in the right direction?
Well, I think that it starts with to reaching out to somebody like you, somebody who I think it's not just CPAs and enrolled agents, also are highly qualified, to advise and to start the conversation. I think that's something that I would notice that whoever that is, whoever that's brought in, so it should be somebody who is familiar with really with two types of things, that they should be familiar both with U.S. domestic, tax laws as well as U.S. international. And part of the reason for that is that there's a layered approach. That is that that the U.S. international rules, whether it's the inbound rules regarding tax regarding investments held by somebody who's not from the U.S. and so trying to minimize withholding, or the rules with respect to U.S. outbound, where the U.S. people have overseas holdings. And by the way, and pre-immigration planning ends up combining both elements of those. But a lot of those international rules, that they have the effect of switching on and switching off various U.S. domestic rules. And so to have only the U.S. international rules is to miss a lot of the context that makes the international rules make sense. And then the thing I would add is that they should also sort of know their boundaries, know what their lane is. So, for instance, that in all these circumstances, we're talking about somebody coming to the United States from another country with its own tax laws. And so that these are things that should be coordinated, because that if the U.S. Advice ends up triggering greater non-U.S. taxation, then the overall plans are defeated. And so that there should be some means by which that the non-U.S. planner and the U.S. planner are able to discuss things with each other, so that it could very well be that the client, the taxpayer, feels conversant enough to be able to coordinate those, but ideally that you want the tax professionals speaking with each other and who are able to translate the concepts back and forth to understand possible impacts of one set of plans against the other, and again, sort of having somebody who can who's in that position is very important. I think that's something that is something that you do well in particular.
Thanks a lot. Appreciate that vote of confidence. But that's perfectly said. That's very well said. Particularly the last point you made about understanding the jurisdiction from which the person is coming. That is key, because you're right. Sometimes we've seen in so many cases, there's a tax team, or there's a tax professional who is just focused on, again, they stay in their lane. They know one thing, which may be the US, and they optimize for the US, and they're completely blind to the potentially adverse consequences and the other jurisdictions in which this person is exposed.
Yeah, and so
Mhm.
I realize that this may be sort of jumping ahead in the
Yeah,
conversation.
sure.
I'll give you,
No, this is
but
fair.
I'll give you an example of the kind of thing when that is that,
Hmm.
very
Hmm.
often the basis planning is is part of the planning. That's somebody who
Hmm.
is going to come to the U.S. and is going to subject themselves to worldwide taxation, worldwide reporting. At
Hmm.
that point, it's helpful to have to have a higher basis, something reflecting, say, recent appreciation in assets. The
Hmm.
question is
Hmm.
how you get there, and there are a
Hmm.
couple of ways to get there. One is with real transactions, and the other is with certain tax elections, provided that the
Hmm.
circumstances allow. And so,
Hmm.
look, that if you can have it in that if certain assets, certain businesses are being held in a form that's treated one way for U.S. purposes, and another way for non-U.S. purposes. To the extent that you can make a U.S. election, for instance, to have a particular entity that might default to corporate status as having liquidated under U.S. law, but
Hmm.
because it's solely a U.S. election, that's
Hmm.
something where that again, sort of before the person becomes subject to U.S. worldwide taxation,
Hmm.
that's an option. But another type of planning that you see is where that if that something like that is not available,
Hmm.
essentially trying to force a to market
Hmm.
by doing real things, which is that if you
Hmm.
have a certain portfolio of stock, selling some stock and buying other stock, for instance, that you sell Pfizer and buy Moderna, or the other way around.
Hmm.
But the thing is that those are real transactions, and so the question is,
Hmm.
well, how is the home country going to tax you as you do that?
Hmm.
And
Hmm.
is that worth the U.S. basis step up?
Hmm.
So that these are and likewise, and this is something I run into real estate. Somebody has a
Hmm.
portfolio of condominium units, and and condominiums typically have more than one multiple units in the real estate development. So theoretically, that
Hmm.
somebody could sell one and buy the other. But again,
Hmm.
that's a real transaction that may have either home country effects, and depending on the tax rates, again, may not be worthwhile. And particularly for real estate,
Hmm.
site country effects. And
Hmm.
so that you have to decide whether or not that's worthwhile, and then for that matter, that there may be certain assets that even though that you could affect that step up, by engaging in certain transactions, sell one thing, buy the other. It may be
Hmm.
that the particular investment is sufficiently unique,
Hmm.
where that there's no substitution. There's that if you sell Apple and buy Lenovo, there's nothing that's quite like Apple. So,
Yeah.
that there are both, business investment,
Hmm.
as well as non-U.S. tax considerations, that go into the planning. And it's always I think that, something that there is a kind of modesty that's helpful for to seek out in tax advisors, and that is to make sure that the tax tail doesn't
Hmm.
wag the business, the investment, the real life
Hmm.
dog.
Hmm. Yeah, absolutely. Yeah, that's a fair point. It's not just about tax optimization. There are bigger pictures. There's a bigger picture to consider, and particularly, so I guess it's relatively easy for people who are coming from, let's say, a low tax jurisdiction like Singapore, where I'm based, or Hong Kong, or the Middle East, the Emirates, Saudi. But if it is you're coming from a relatively high tax jurisdiction like Western Europe, or Latin America, like Brazil or Argentina, which, they have notoriously complex tax system. Definitely, definitely, definitely. You want to have, to your point, these advisors need to sit, talk to each other, and coordinate. Yeah.
Right.
Okay.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.